We are going to work on the 18-1 work together. Like I stressed before I leave, it's very important that you guys read these sections before you do the work together. It's just going to make this so much easier to understand since you don't have me teaching the information to you first. Please read so that when we're doing it here on our work together, you can connect it and it can make more sense to you then. Okay? So if you haven't read, shut off the video and read 18-1. Okay, 18-1 is 537 in your book, and we are going to journalize the following transactions completed during the current year. We're going to use page 1 of the cash payments journal that we have here. The abbreviations for a check is C. So January 3rd is our first transaction, and it says that we paid cash for a paint mixer, $500, and that was check 142. So this should be pretty simple. January 3rd. Okay, how much cash did we pay? $500, so I'm going to write that in first. That's my credit of $500. Now what am I going to debit? Are we paying off an account? No. Are we making a purchase, or is it a purchase discount? Well, that's a credit anyway. So I know that the debit is going to be under general, but I don't know, however, what account it's going to go to. Now, if I'm doing a paint mixer, I'm going to assume that that is store equipment. And then it also said that we are using check 142. Okay, on January 5th, we paid cash for an office chair, and it was $400. Okay, so my cash credit is going to be $400. Okay. I'm going to have a debit of $400. And that debit is going to go, since I bought an office chair, that's going to be office equipment. And that was check 145. Why don't I need to write C in there for the check? Because check number is already labeled in that column. So I'm really essentially saying check number 142, check number 145. Now we're jumping to February 26th, so I need to make note of that, February 26th. I paid property taxes on real property with an assessed value of $80,000. The tax rate in the city where the property is located is 3% of the assessed value. Okay? So this is where I need to get up my calculator. And it says that it's 3%, the tax rate is 3% of the assessed value. Okay, so I know that the assessed value is $80,000, so I'm going to take 80,000 times that 3%, and I should get $2,400. That's going to be the taxes then that I'm going to pay. Now I'm paying taxes here, so $2,400 that I'm paying out, so that's a credit to my cash. I'm going to debit $2,400, and that debit then is going to go to my property tax expense. Let's check 182. Okay, and the last one that we have for a transaction is on July 2nd. On July 2nd, we paid cash for a filing cabinet for $260. Okay, so I paid $260 for this file cabinet, which is a debit of $260. Okay, and since I'm buying a file cabinet, that's probably not store equipment. That's something that we're going to use in the office. So that's going to be office equipment. And I just noticed I didn't put the month of July there. So I should have July written. Okay, and then that was check 216. Okay, so now I'm done with my cash payments journal, my transactions. The second part of my work together, it says that I'm going to post the general columns of the cash payments journal. Now, why does it say that I'm just going to post the general columns? Why am I not posting these? Hopefully you're thinking because we don't post these things individually. We wait until the bottom and then we post the total of the accounts payable, the total of the purchases discount, the total of the cash. So since we're not done with this journal page yet, we're just going to simply post these individual over here in my general debit. So my first one is going to be to store equipment. So I'm going to go down here to store equipment, and it was January 3rd. And I need to put in, my post reference is cash payment, so CP1. And that is a debit of $500. Okay, and so my new balance is going to be $10,230. I'm then going to take that account number 1215 and I'm going to bring it up to my post reference on my general journal. Okay, I'm going to move to my next one, the office equipment of 400. So I'm going to find office equipment. That was on the 5th. Cash payments journal, page 1, $400 debit. I have to find my new balance then, $15,880. I'm going to take that account number, 1205, and bring it up to my post reference number. The next one, my property tax expense. So this one is the first transaction or the first in my account, so I need to write in the month and date. February 26, 2013. Remember, I don't put balance here because this isn't a balance that I'm bringing here. This is actual transaction. So I don't put balance there. My post reference is cash payments, journal page 1. And this was a debit of $2,400. And so my balance is a debit of $2,400. I'm going to bring that account number, 6145, up to my cash payments journal. And then my last one, my office, that was on July 6th. So here I need to make note of that too, that's July now, 6th. Cash payments journal, page 1. And that was a debit of $260. And I need to find my new debit balance. And that is $16,140. Then I'm going to bring that number, my account number, 1205, up to my cash payments. Okay. So that was section 18.1. Hopefully that was pretty easy. I think really the only new thing would be that those property taxes, and I think that it spells it out pretty easily for us in that transaction, how it says that we are going to pay 3% of the assessed value, and it gives us that assessed value, so we know that we just need to multiply 3% times the assessed value that they give us. Okay. Now, you can go ahead and do 18.1 on your own. 18.1 application problem, and then you'll need to read 18.2 before you watch the 18.2 work together.